In a week where the entire crypto market is stumbling, two altcoins are defying gravity, and the timing couldn't be stranger. While Bitcoin struggles to find direction and Ethereum traders panic over sudden liquidity drops, XRP and Solana ETFs are quietly pushing into the green. For months, investors were convinced that only Bitcoin and Ethereum ETFs had real institutional backing, but today's numbers tell a completely different story. Something unusual is happening behind the scenes, and these two altcoins seem to be at the center of it. In this video, we'll break down exactly why XRP and Solana ETFs are outperforming, where the inflows are coming from, which institutions are driving the shift, and what this means for the next phase of crypto adoption. And if you believe XRP and Solana might be leading the next wave of ETF-driven growth, go ahead and hit that like button, because what's happening right now is bigger than most people realize. But before we get to the money flowing in and the green candles showing up where they're not supposed to, we need to understand how this whole situation even started. The rise of XRP and Solana ETFs. For years, the idea of altcoin ETFs felt impossible. Bitcoin was the safe bet. Ethereum was the runner-up. Everything else, too risky, too experimental, too unpredictable. That was the narrative, until 2024 and 2025 completely flipped the script. Solana surged from an ecosystem disaster to a globally recognized high-speed blockchain with massive developer momentum. XRP fought through regulatory battles that would have destroyed most cryptocurrencies, yet came out alive and stronger, with major financial institutions reconsidering its role in cross-border payments. As Bitcoin and Ethereum ETFs brought in billions, analysts began looking for the next group of assets with institutional potential. And two names rose to the top over and over: Solana for speed, XRP for liquidity. By mid-2025, the sentiment was clear. If any altcoin ETFs had a shot at mass adoption, it would be Solana and XRP. And that's when the issuers stepped in. But it wasn't retail investors leading the charge. It was big, traditional finance.
The ETF issuers behind XRP and Solana. When altcoin ETFs began gaining traction, the first question was simple: who was actually brave enough to launch them? For XRP, the leaders came fast. Grayscale with the GXRP ETF, giving investors regulated exposure to XRP's market performance. Franklin Templeton, a massive Wall Street name, launching the XRP-Z ETF. These weren't random crypto startups, these were legacy institutions with billions under management choosing XRP specifically. On the other side, Solana saw a wave of filings. Hashdex pushing for broader index ETFs, including SOL. Bitwise preparing spot Solana ETFs with strong early demand. Additional issuers lining up to create next-gen crypto baskets with SOL listed as the centerpiece. The pattern was impossible to ignore. Whenever institutional players were asked which altcoins had the right fundamentals for ETFs, the answer always returned to the same two: XRP and Solana. But the real surprise wasn't the filings, it was what happened the moment these products hit the market. Why XRP and SOL ETFs are in the green while markets bleed. This is where things get interesting. The broader crypto market has been shaky. Altcoins across the board are down. Retail fear is rising. Bitcoin dominance is climbing. And yet, in the middle of this uncertainty, XRP and Solana ETFs are showing positive inflows. Why? Because in uncertain markets, investors don't run toward the most volatile assets, they run toward regulated exposure. They want controlled, familiar, institutionally approved ways to get crypto exposure without needing wallets, exchanges, or self-custody risk. And when crypto looks dangerous, ETFs suddenly look safe. In the last 48 hours, ETF tracking models showed something unusual. Bitcoin and Ethereum ETFs saw neutral or negative flow, while XRP and Solana products moved into the green. That's not retail behavior, that's institutions reallocating capital. Here's the logic behind it. XRP is seen as the liquidity altcoin. It's stable, fast, predictable, and tied to real-world financial use cases. Institutions like that. Solana is the performance altcoin. High throughput, booming ecosystem, transactions so cheap they look fake, analysts expect massive long-term growth. In a fearful market, these two assets look like the most professional altcoin bets available. And the more surprising part, some institutions appear to be rotating money out of Bitcoin ETFs and into altcoin ETFs. That's a shift nobody expected this early. And if you want more updates on how institutional flows are shaping token prices in real time, make sure you hit subscribe, because this trend is only getting louder. But don't get the wrong idea. This sudden green momentum doesn't mean everything is perfect. The hidden advantage XRP and Solana have over other altcoins. The reason XRP and Solana ETFs are getting attention is simple. They have advantages no other altcoins can match. Here's what institutions see in them. XRP, the stability and utility advantage, used by financial institutions for liquidity flows, known for predictable settlement behavior, lower volatility compared to other altcoins, high liquidity depth, easy for institutions to buy and sell. It's the closest thing crypto has to a utility-focused asset that behaves like financial infrastructure, not a hype token. Solana, the performance and scaling advantage, one of the fastest blockchains in the world. Growing developer ecosystem, low fees that don't explode during network spikes, strong appeal to fintech, gaming, and consumer applications. Solana isn't just fast, it's economically efficient, making it attractive for long-term adoption. Other altcoins simply can't match this combination of stability, utility, and scalability. That's why when ETF issuers were looking for non-Bitcoin assets with real potential, the list was incredibly short. And that's why XRP and Solana now appear to be becoming the first institution-approved altcoins. But with momentum rising, there are still risks investors can't ignore. The risks behind XRP and SOL ETFs. Every opportunity has a shadow, and both XRP and Solana ETFs come with challenges that could limit their short-term growth. Solana's network reliability. Solana's past outages still haunt institutional reports. Even though uptime has drastically improved, multiple funds include risk warnings specifically mentioning Solana's historical instability. XRP's regulatory residue. Even after the major 2023 ruling, some institutions still want complete clarity before heavily allocating. Ongoing global regulatory adjustments could impact adoption speed. ETF demand cycles. Just because inflows are positive today doesn't guarantee consistency. ETF hype can cool quickly if broader markets enter a deep correction. Market-wide fragility. Macro uncertainty still dominates. If Bitcoin drops sharply, all ETFs, even high-performing altcoins, could face short-term pressure. So yes, XRP and SOL ETFs look strong now, but this story is far from over. Because what today reveals is much bigger than inflows. It reveals new institutional behavior, and the implications are massive. What today's ETF strength really means. This week's inflow shift signals something crypto has waited years for: diversification at the institutional level. For a decade, institutions treated crypto like a two-asset world: Bitcoin for value, ETH for technology. Now, they're expanding. XRP's ETF performance shows institutions now accept XRP as a real liquidity asset with long-term potential. Solana's ETF performance shows institutions are betting on speed, scalability, and next-gen blockchain architecture. Together, they represent the first real altcoin diversification wave. This could trigger a domino effect. Other altcoin ETFs may get accelerated approvals. Major asset managers might create crypto baskets with SOL and XRP as core holdings. Hedge funds may begin using these ETFs for tactical long-short strategies. And retail investors could shift into ETFs as safer long-term exposure. And suddenly, the crypto ETF landscape becomes more than just Bitcoin and Ethereum. It becomes an ecosystem. But the real question now is, where does this momentum go next?
What to watch next? If XRP and Solana ETFs continue outperforming during a weak market, we're entering a new phase of crypto investment psychology. Here are the key signals to watch over the next few days and weeks. 1. Daily ETF inflows. If XRP and SOL ETFs keep attracting capital while BTC and ETFs lag, institutions are rotating early. 2. Price resilience. Watch if XRP and Solana maintain strength even if Bitcoin faces another correction. 3. New ETF filings.
any filings from BlackRock, Fidelity, or Vanguard will send shockwaves through the market. 4. On-chain activity. If ETF inflows coincide with higher on-chain usage, this becomes more than financial speculation. 5. Market sentiment. If analysts begin labeling XRP and Solana the institutional altcoins, expect a major narrative shift. This story is still writing itself, but today's reaction is the first real signal that altcoins, real altcoins, are entering institutional territory. Today's ETF performance shows that XRP and Solana aren't just surviving the market uncertainty, they're outperforming it. While fear spreads across Bitcoin and Ethereum traders, these two altcoins are proving that they have something other assets lack: institutional confidence. XRP brings the liquidity backbone, Solana brings the performance engine. Together, they're shaping a new chapter where altcoin ETFs might become just as common and maybe even just as powerful as Bitcoin and Ethereum ETFs. Now the question is yours. Which ETF do you think will dominate long-term? XRP or Solana? Drop your prediction in the comments. I read everyone. And if you want real ETF analysis without hype or fear, hit subscribe so you never miss what happens next.